So very much helps me as well.
Exactly. So I will give you access to it after the session. Yeah, go for it.
So on 1st of May 2015, gifted Oak Cottage to her adult son, always let out at a commercial rent and had never occupied it herself. Let to new tenants from January 15 at a rent of $950 per month. Originally cost $275,000 in 2010. Market value at date of gift was $365,000. Okay.
Oak Cottage, what are your thoughts? First, dates are very important. So 1st of May 2015. Obviously, it's a bit confusing with the tax year we're looking at, but the principles are the same. So 1st of May 2015, gifted. What are we thinking when we see gifted to son?
Normally when I see the gifting, it makes me think of, say, is it eligible for some kind of gift relief? But also I'm thinking is that when it's a transfer, that it takes place to a connected person, that if it's to her son, that he may be considered a connected person, then the transfer would take place at market value.
Excellent. Exactly what you need to be thinking about. Transfer at market value. Why? Because her son is connected, and yes, gift relief. However, will gift relief be available on this property?
Trying to recall my rules on that. I don't think it would. I don't think it would fall under one of the kinds of assets that it would be where gift relief would be eligible.
Exactly, because one of the conditions of gift relief is that it needs to be a trading asset. So under Section 165 TCJ 1992, you can potentially claim gift relief as long as it's an asset used in the trade. However,
a business, yeah.
Exactly. So, however, we've been told that she has always let out the property at a commercial rent. So therefore, this is an investment property, therefore an investment asset, therefore not eligible. The other potential gift relief available is under 260, Section 260, but that's only available if the asset is immediately subject to inheritance tax. So you can potentially claim under 260, and you can potentially get a question as well, where it says outline the IHT implications, and you talk about gift relief, you'll connect it to IHT, and you'll say Section 260 is available. But obviously, this is not the case here.
Yeah. So gifted to adult sons, so there'd be a transfer at the market value. Always let out the property at a commercial rent and had never occupied it herself. Let to new tenants from 1st of January 2015 at a rent of £950 per month. I'm trying to remember what this reminds me of. If, say, there is a rent that is being paid out when the property has been gifted, that, of course, it would technically be taxable income, but would there be any kind of deduction for that rent?
No, not exactly. So it's just what you've said. It will be taxable income for income tax purposes. So looking at dates, how much will be subject to income tax? If we're looking at the 2015-16 tax year, looking at dates, what are your
thoughts? If it was only gifted to the adult son in May 2015, then it would be 11 months worth of rent that would be taxable?
No, we're looking at it from Sue's point of view.
Oh, from Sue. Oh yes, of course, yes. Trying to think of how the rent would apply in this case for her, that it would be taxable on her.
Exactly. The only way it's taxable on her is because it was let to new tenants from 1 Jan 2015, which is in the 14-15 tax year. We're looking at 15-16. So therefore, 950 per month. So therefore, the month of April 2015 would have been rental income of 950. And then once she gifts it to her son, she does not receive the rental income anymore. So 950 will be subject to income tax and the rental income for the 15-16 tax year, the 1 month basically.
Cool. Okay. Just got to remember that it was Sue, because yeah, I thought of her son instead, and yeah, but it's got to be 1 month for her. Yeah.
That's the income tax implications. What are your thoughts on capital gains tax, please?
Oak Cottage originally cost 275,000 in 2010. The market value at the date of gift was 365,000. So if she's gifted that would that just be a simple, say, capital gains tax calculation there from when she's gifted it, that the transaction, the market value at the date of gift, that would be the 365,000 would be the proceeds, and the original cost would be the 275.
Agreed. Excellent. So that's the simple. I think they've helped us out in the sense that the first point is fairly straightforward. The capital gain is 365 less 275. So can you see my screen?
Yep.
The Excel screen, right? So it's just market value less base cost of 275 gives us a capital gain on Sue for £90,000. Now this is in absence of gift relief claim. In absence of any gift relief claim, and it's not available as not trading asset and not subject to IHT. That's Oak Cottage complete. Let's move on to the next point, please.
Okay, on 1st of June 2015, she granted a 25-year lease on the Plaza, a commercial property, to Salim, an unconnected party, at a premium of 95,000, at which time the freehold reversion was valued at 250,000. Inherited from her mother in 2010, when the probate value was 200,000. No additional rent payable under the lease. Okay, so granting of a 25-year lease, that this would be considered a short lease, and it's a granting out of a freehold. So that 250,000 would be, and I'm just looking at it carefully. No additional, the premium of 95,000, so freehold. So would the freehold reversion, would that be, I remember that this is a part disposal, and that the costs, that there's the A over A plus B.
Excellent. So that's the main thing that you've correctly pointed out, and that's very important. Very good. Yep. So A over A plus B.
I'm just thinking about, say, because of course there's the mention of the premium, and that there would be the capital element that would be calculated there. So we need to do the 2% times the 95,000 over n with n minus 1.
Exactly. So let's do that now. So you are saying 2% multiplied by n minus 1. So what is n here?
It would be the number of years on the lease minus 1. So in this case, if it's a 25-year lease, is it the number? It's not say the number of remaining years. It's just the number of years. So it'd be 24.
Okay, so 25 minus 1 multiplied by
95,000.
Very good. So that will give me 0.02 24. So we are saying the capital element is 45,600.
Okay. And that'd be treated as the proceeds.
proceeds 45,600.
Mm-hmm.
Then we have the base cost. So what are you thinking in terms of base cost?
With the base cost, that this is where we would use the A over A plus B, that it's like treated a bit like a part disposal in that sense, that if it is, just looking at it carefully, we would use the probate value from when she had first inherited the plaza as the base cost, and then times that over the A over A plus B.
Okay, multiplied by A. What is the A?
A would be the, I'm recalling this because of course it's like slightly different A's, is that would the small a be the capital element that's been calculated, so the 45,600?
Excellent. That's the stumbling point, but you've correctly identified that that is the small a, which is the capital element, over
95,000. That would be the premium, and then the reversionary interest, which on the question was, yeah, so it'd be 95,000 plus 250,000.
Perfect. That is perfect. So I'll just do the calculation here. I am doing 200,000 multiplied by 45,600 divided by 3, 4. That gives me a base cost of 26,434. 26435, and we're saying that's negative. Therefore, our capital gain subject to tax will be 19,165. You correctly mentioned A equals capital element, and capital A equals premium, full premium, I'll just put. And B,
I remember there was something funny with that. Is that I know I can look it up in my memory joggers in the exam, but I tried to recall that those are those different separate bits, kind of compared to say other part disposals.
That's perfect. That's perfect. This was the capital gains tax implication. So therefore, we need to move on to the income tax implications. What are your thoughts in terms of income tax?
Well, in terms of the income tax, that I'm trying to recall this carefully, because also bearing in mind what we were talking about earlier, that if there were taxable income, I know technically you would think of the premium as being taxable. That normally that's there's the P times 2% times the N minus 1 for calculating what would be the taxable income. But I'm trying to remember if there's something with a short lease, isn't there, well, will we still use that as being treated as the income, or isn't there something else that we have to do?
No, you're right. There's nothing further. So effectively, the balance would be your amount subject to income tax. So effectively, it'll be 95,000 less the capital element, gives you 49,400 subject to income tax. So yes, it is as straightforward as that. Nothing further to consider. I'll put income tax in blue, and I'll put capital gains tax in green. Okay. Any questions? Has that all made sense?
Yep, I'd say that makes sense so far. It's just recalling that bit about, say, deducting that capital element from to reach the income in that case. I've made a note of that to remember.
In terms of marks, what we would receive so far is a 15-mark question. I would probably give half a mark here. I think this is quite, there's nothing further there. So half mark there. I'd give 1 mark for this calculation. And let's just say another mark here. So we've got 2.5 there. In terms of Oak Cottage, I would give half mark there. So 3 so far. Correctly realizing market value, another half mark, 3.5, 4 for the gain. And then I think avoiding any gift relief would give you another half or full mark. So let's just say we have got 5 marks out of 15 so far. So not too bad. Let's move on to 3 and 4, please. Number 3.
1st of December 2015, sold the lease on a house for 145k, incurring legal fees of 2,500 in the process. Originally acquired a 70-year lease on the property on 1st of March at a cost of 72,000. Okay, so this would be considered a long lease as it's more than 50 years long. This would be a straightforward capital gains tax computation, deducting the original base cost from what would be the net proceeds after you deduct the legal fees from the gross proceeds to get 142,500.
Is it a, so we're saying it's the assignment, right? It's the assignment, sold the lease. She acquired a 70-year lease in March 1990. So the question is, how many years are remaining on the lease?
Oh, yes. This is where I get confused. Is that if she sold the lease then, well, that would make it less than 50 years, wouldn't it?
Most likely. So my understanding is that's another 25 years. So it'll be around 45 years.
Yeah.
Which makes it less than 50. Also looking at dates, March and December, I know there will be the other calculation, you know, where you do the months as well, where you sort of apportion the figures from the lease table and you get certain number of months. So my understanding is March, April, May, June, July, August, September, October, November. A further 9 months will be taken off. So I think, top of my head, we're looking at 44 years and 3 months are remaining. 44 years and 3 months. If we look at from 1st March 1990 to 1st March 2015, that's 45 years. And then another 9 months is 44 years and 3 months remaining. So effectively, that is what we need to do. Now, your proceed, you correctly mentioned, is 145. Legal fees are an allowable expense. So we're left with net proceeds of 142,000. So let me just get started there. Capital gains tax. Proceeds. Legal fees. Gives you net proceeds of 142,500. So that's where we are at the moment. Okay, now we'll have our less cost, and that's where we'll do our working. So we have cost of 72,000.
Yeah, by the percentages. Yeah.
Let me leave that bit too. So what are your thoughts?
So if it's, remember, is that if it's technically, if it's the sale of a lease, that it's like that S over X or S over P percentage, that it's a percentage, the original cost is apportioned, yeah, by a percentage for the years left when the property is sold over the percentage for the number of years left on the lease when it was purchased or when it was acquired. Have I got that right?
Excellent, spot on. So I'll put here years remaining on assignment, meaning disposal. So we said 44 years, 3 months. and years on, shall we say, purchase was 70 years.
Yeah.
Okay. So therefore, if it's 70 years, we have a percentage of 100. So it's this figure here, what we'll work out here.
Is the 44 years and 3 months over the 70 years.
Okay, so it'll be X over 100 at the moment. In terms of a percentage, we need to work out 44 years and 3 months. Have you got the lease tables in front of you?
Yes, I have.
So let's
Lease
work
percentage
out.
table. I think it only does it as years on here.
What have we got for 44 to begin with?
97.595 as the percentage. We're looking in it, yeah.
595. Now we have the issue with the 3 months. So this is where the side calculation comes in. So we'll do 3 over 12 multiplied by 97. Sorry, what's the figure for 45 years?
98.059.
Less 97.595. That's effectively what we're doing. Because we are taking a further 3 months from the years between 45 and 44 years. So could have put it here as well. 44 is 97.595. 45 is 98.059. And then it's just a matter of a calculation. So I'll just do that here. 97.595 plus 3 over 12 times 98.059 minus 97.711 over 100. Therefore, it'll be 72,000 times 97.711 over 100. We put that as our base cost. So we are effectively apportioning our base cost to 7352. So not much, but that is what it is. And then we have our capital gain. Did that make sense?
Yep.
Okay, do you want to just relay it back to me exactly what we've done there, please?
So because even though it's a 70-year lease, bearing in mind that by the time we get to 2015, that it's less than 50 years to run on the lease, that it would be considered the sale of a short lease. And so the proceeds would remain 145,000 minus the legal fees, of course. And then that the base cost, the original base cost, is apportioned according to the lease percentage table, according to the number of years left on the lease. But because we're halfway through the next year, that we have to take account of those extra 3 months as well to add on to what would be the percentage, to divide that by 100, which would be the case if it was, say, over 50 years, because that's the original, that would be considered the original percentage on the years at purchase, that the cost is apportioned according to the difference in those percentages.
Exactly. You know, that's perfect sense. Now, this 70 years could easily have been, let's just say, 48 years. Then what we do is look into the lease table again, get the figure for 48 years, and it'll be the 97.711, which we worked out, over this new figure that we found.
Yeah. Well, 99.289 would be if it were 48 years.
Exactly. This is a very specific question. So because we are very close to 50 years over here, that's why the base cost has not differed too much. But if we were closer to, let's just say 10 years, which is a lot more away from 50 years, this would be a lot lower. Our base cost would have depreciated, you could say, down to, let's just say 20,000. So we're still close to 50 years. That's the reason why we're still close to our full base cost. Okay, that's perfect. Just thinking, income tax element. I don't think there will be any income tax element here.
Not that I could see, no.
It's literally the assignment of the lease, and that's about it. Let's move on to subsection 4. Do you have any questions on Whitelands?
No, I don't think so. That part's made sense to me.
Number 4.
Hello?
Can you hear me? Hello?
Sorry, I lost you for a second there.
Yeah. Number 4, please.
Yeah, number 4. 1st of March 2016, granted a 10-year sublease on a property, Bay House, to Kate, who is a business contact. Paid Sue a premium of 30,000. Sue had been granted a 15-year lease by the freeholder on 1st of March 2012, paying a premium of 35,000. There is no annual rent payable under either lease. So, sublease out of a short lease, if it's, say, the 15-year lease by the freeholder that Sue has got, there would also be income tax implications for the premium that she receives from Kate.
Agreed. So let's start with the capital element. It's best to always start with the capital element. So you've correctly mentioned it's a sublease out of a short lease, which effectively has all the different calculations going on. However, definitely doable, not too difficult. We just need to sort of break it down and see the dates properly. So 1st March 2016, granted a 10-year sublease. So 1st March 2016 is the sublease. Originally granted 15 years on 1 March 2012.
So that means, sorry, I was going to say, so that means that on the original lease that Sue has from the freeholder, then that means that there are 11 years left on that lease. Excellent.
So when Sue's original lease began, she had 15 years. So we need a percentage for the 15 years. We'll also need a percentage on the 11 years, and we'd also need a percentage on the expiry of the sublease. How many years is that when the lease expires?
Let me just see. Well, on the original lease, when the sublease expires, you mean, or
sublease? Sorry, yes, the sublease.
Yeah, sorry, I was just trying to make sure I got that clear in my head. So if there were 10, if it were from 11 years, so there'd be 1 year left when that sublease expired.
Excellent, perfect. That's good. That's very good. So let's get started on the computation. We have a premium of Kate paid Sue a premium of £30,000. So this is a house. £30,000 proceeds. What is our allowable cost?
So if it's the cost over, it's the cost times by the percentage number of years left on the original head lease minus the percentage number of years when it expires, divided by that difference is divided by the total percentage on the years when the original lease was granted.
Sublease was granted, right?
Yeah. Such a mouthful trying to get through all of that, trying to recall it all, but yeah.
Yeah, definitely. So we said 15, expires was 1 and 11. Now we need to get the percentages from the tables. Have you got that in front of you?
Yep. Hang on. Just pull back to the beginning. So for 15 years, we have 61.617. For 11 years, we have 50.038. And for 1 year, we have 5.983.
Let's put these as percentages. Yeah, we'll just leave it at that. So that's perfect. So therefore, our allowable cost is.
If it's with the actual cost, just having a look through. Sue had been granted a 15-year lease by the freeholder. So would the cost be considered that original premium?
The 30 or the 35?
Just thinking carefully here, because the
All fees.
Yeah, so that's the premium that Kate is paying Sue. Would it
So it'll
therefore
be the original, as you mentioned, it'll be the original premium. That's correct, of 35,000. Good.
Mhm.
Good. 35,000 multiplied by what did we say? We said grant of sublease.
So that would have been the 50.038 and then minus the 5.983. I think.
Over.
Yeah. And then and yeah, and then the total percentage for when the head lease was granted. Yeah.
That's perfect. Let me do that in a formula. 35,000 multiplied by 50.038 minus 5.93. 25,024 is our allowable cost, which gives us our gain to be 4976.
Uh-huh.
Okay, are we done, or is there something else?
Well, if it is, yes, because also there's the income, because for income tax purposes that the premium that Kate is giving Sue, is paying Sue, that would be subject to income tax, but it would also have a bearing on what the taxable gain would be.
Exactly.
Wouldn't it actually, is there a chance that, say, whatever the taxable premium is, that reduces the gain?
Wherever wherever the taxable premium is, it reduces the gain. Yeah, I think, maybe we should have done income tax first for this one. Because, exactly, because we need that other part, which is amount assessed to income tax. Yep. So, I think there is a point to make where we should do income tax first. So let's do income tax, and then we'll come back to capital gains. So, so we had the premium of 30,000,
Mhm.
and then we remove the capital element, which is 2%
So 2% times 30,000 times,
it'll be 35,000.
sorry, 35,000 even, sorry. Times 35,000 times 15 minus 1.
So we have 9,800. That effectively gives us our property income.
Mm-hmm.
Sorry, this won't be, we're looking at income tax, so it won't be 15 minus 1, it'll be the 10 minus 1.
Oops.
Because,
oh, yes, of course, because it's payable to her. Yeah.
yeah, exactly. So it's on the, yeah, we're looking at it from Sue's point of view. She's receiving the 10 minus 1. So we'll say property income.
Will we need to change the capital element then? Because will it affect, sorry, your formula on the actual thing?
Oh, yeah, that'll become 30,000, right?
No, I meant the your actual calculation on the side, the minus 9,800. Was that 10 minus 1?
Oh, yeah. You're right. Yep, 9. But no. But we've made another. You're right again in terms of that should be 30,000.
Right.
Because we are looking at it from Sue's point of view, and she's receiving the income from the grant of a 10-year sublease on a property. So it's 30,000, and we're looking at 10 years. So that's good spots. As you say, it's very easy to sort of
get lost in it. Yeah.
Get lost. Yeah, somewhere to get lost. So I think that's looking right now. 2%, 9, 30,000. So property income is 24,600. However, we need to remove proportion relating to sublease.
Is this? I vaguely recall this. I know I can look it up in my file, but don't you have to do an S minus X over Y with that as well? Or am I mixing that up?
No, I think what you do is you'd go back to the original premium. So we'll go back to the original premium elements, which is, yeah, so now we'll do the 35,000 less our 2% times our 14, which is 15 minus 1 times 35,000. So that will give us 25,200 back in 2012. So what I've just done there is I've done the original 15-year lease with a premium of 35,000. What was related to her taking out the 15-year lease from the freeholder. Now that 25,200, effectively what happens is you get a reduction on the number of years you give in the lease over your total holding of the lease, which will effectively be 25,200 multiplied by 10 over 15. Deduction, so it's minus 16,800. Therefore, the amount subject to income tax in the tax year would be 7,800. Did that make sense?
Yep. Yeah, I think so.
And then we said 7,800 is assessable. So we come back to here, amount assessed to income tax would be 7,800. Therefore,
here's the catch, is that it can't create a capital loss, so it would basically be nil.
Exactly. Perfect. And what I'll just put here, cannot create capital loss.
I'm sure that'd be worth half a mark or something, pointed that
Definitely.
out or something.
100%. So we already picked up 5 marks. The balance of the marks will be picked up as follows. So I would say half mark for legal fees. That's good. Base cost will give you another half mark, and then you'll pick up half marks here. So effectively, base cost will give you about 1.5 to 2 marks. So let's just say 2.5 marks here in total, which is 7.5. And the bulk of the marks will come from Bay House. We'll start with the income tax. Half mark there. No, in fact, I'll give a full mark there, a full mark here. So that's 9.5. I'll give half mark there, 10. Then you'll move on to this part here, which will be 1.5 marks coming down here. So 11.5. Half mark here, 12. This will all give you another mark, 13. And then the final 2 marks will come from a full computation or calculation of the total income tax payable and the total capital gains tax due for SU in 2015-16. So I'll leave that bit to you, just do a tally up. I'll send this document over to you as well, so you can use it as you like. But how did you find that? Yep.
Overall, it's fine. I was just trying to recall, did the question ask you to calculate the income tax and capital gains tax payable? Because I know it says go through the income tax and capital gains tax. I was just checking to make sure that
you are not required, so it's fine.
Yeah.
Therefore, yeah, so all we need to do is just tally up the income tax, tally up the capital gains tax, and that's it. We don't need to go any further because they haven't told us whether she's an additional or higher or basic rate taxpayer, for example.
Yeah.
We don't know if she's made other disposals in the tax year, and those sort of things. We don't know about her other income as well. So that's about it. 15 marks was good. Majority of the marks came from Bay House. Okay. And yeah, I think if you break it down, you will be fine. It's not too difficult. If you practice 1 or 2 more questions like this, I honestly think you will be perfectly fine with a lease question in your exam. Do you have any questions, any thoughts, comments?
Just thinking through it, is that I was feeling a bit better about that because, of course, as I said, the sublease stuff is the stuff I find the trickiest. Just recalling the part on how to assess according to the property income. Could I have a quick look at the at your Excel spreadsheet again, please? Thanks. Just having a quick look through. Yep, that all makes sense, that bit.
Small a over a plus b.
Yeah, I felt fine with that. I felt more confident with that. It's more the sublease stuff. I need to remember that about the with the short lease, because yeah, what caught me out there was that it said 70 years, and then of course I remembered that it's actually less than 50 years by the time she sells it. So
Yep, exactly.
Yeah,
yep.
That seems straightforward enough to me.
Are you okay with the calculation of 3 over 12 and then the 45, 44? Good.
Yeah, that made sense to me. That was actually something I hadn't thought of, but it's a good idea to sort of go over it, because I remember there is a point about time apportioning the percentage according to a number of months, that need to remember to do that. So the first part of the Bay House bit seemed fine. It's just I think it's just that last bit really about when working out the income tax or removing a proportion relating to the other sublease. I need to just test myself on things like that.
Exactly. I think for these sort of questions, you probably are. It doesn't really matter apart from when you come to this part here, you would have had to done the income tax element. So I guess it is probably better to start with the income tax. But yeah, other than that, as you say, we just need to sort of remember what we're looking at. We're looking at it from Sue's point of view. So what amount is accessible on Sue? So therefore, we will have 30,000 premium and she's let it for 10 years. So 10 minus 1. But then when we're working out when we're removing the proportion relating to the sublease, that's when we'll work out her original original premium 2012.
Yeah. Okay. Yeah.
Questions?
Don't think so. Well, I'm just quickly looking through the chapter to see if there's anything else, because that's covered quite a lot of it.
This is effectively the most you can get when it comes to leases, and we covered. I think there's one we didn't cover, which was no. We covered them all. We covered all 4 types of. So you get 2 assignments and you have 2 grants of leases. We covered all 4. As I said, the only other time you'll get leases would be in an income tax computation question, where it'll be like a small note saying the premium was this and this, that, and then you'll have to just apportion with the number of months or something of that sort. But other than that, what we've covered is very comprehensive. There are further questions similar, so I would suggest that you definitely attempt those. In terms of next session, when is our next session? Please remind me. I do have it written down.
Monday at 2:00.
Yeah, 2 p.m.
Yep. So I'm just looking through, because I'm remembering the other subjects now. Is that we've done remittances, we've done the leases. So the other ones I mentioned included restricted securities,
and takeovers and
that's the other one. Takeovers. Those are the ones. Yeah.
I think for Monday we'll do takeover and deferred consideration. They're both linked anyway.
That'd be good.
So we'll do that on Monday, and then transactions in securities, and also transactions in securities is not too difficult, as in I'm not too sure we need to spend that much time. So I think that lesson we can sort of balance it out with transfer of assets abroad. So yeah, let's leave it at that for today. I've just got another session starting just now. So,
okay, cool. I'll remember to send over a copy of the pre-revision mark so you can have a look.
Please do, yes. And even if you can send the updated revision question bank, so at least then we're not using the 15-16 sort of thing. At least we're up to date. So if you can do that, that'd be great. I shall speak to you on Monday, and you have a good weekend, and just keep it up. Last 4 weeks now, so all the best.
Thanks, Omar. Thank you very much.
You take care, Christian. Cheers.
Thanks. You too. Bye.
Bye.